Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again.
Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about how removing a bankruptcy from a credit report won't really help you when you're looking to buy a home or rental property. Let's go straight into it. So there's a new company that's been partnering with a lot of mortgage companies. Regardless of who you're with, they've been out for a very long time, and if it's not this company, then it's a lot of other companies just like it. The name of the company is FraudGuard, okay? And so pretty much what FraudGuard does, as soon as you apply for the mortgage, then of course you get the pre-approval process. Once they get you pre-approved, you submit some documentation, and that's on a bank level. So they get the documentation from you, like all of your your personal information, driver's license, tax returns in some cases, of course your paycheck stubs, and if you're self-employed, your bank statements and things of that sort. So just to kind of make sure that things are what you say they are. Then later down the line, that's when they start doing a lot of the processing. So not only are we talking about wasting a lot of time, but let's kind of walk through this entire process. So let's say, for example, your scores are there, you got the bankruptcy, but for whatever reason you got the bankruptcy removed. And which of course, either you went through us to try to get that removed, some things come off, some things don't, or you went to another company to try to get that bankruptcy removed. However, you got the bankruptcy removed, right? It's no longer on your credit report. Now, let's say that the company that you're working with, they took it a step further. They went through LexisNexis. Sounds great. The problem is that you still cannot change what's in the public database. If you filed bankruptcy before and you actually Google your first name, last name, and bankruptcy, you better believe it's going to pop up. It may not be on page 1, but it's going to be in the first few pages, and it happens every single time because it's public. It's a public database. And what's worse about the internet is that there's other companies out there that specifically look that information up, like Pacer.gov. That's a government-owned website, and they have direct access to public data information. Companies now partner with that software and provide it to lenders and mortgage brokers and things of that sort. So let's walk through the process. The bankruptcy is no longer on your credit report. You go through the pre-approval process. Then now, of course, you get the pre-approval letter and you start looking for a home. Let's say it takes you about a week or two. Let's say it takes 2 weeks to find a home, get under contract. Now you go through the process, right? Earnest money, inspection, and then right before they go into the appraisal, now you're about 3 to 4 weeks into a deal, right? Now underwriting starts to turn the wheels. Now they do what they call verification of employment, also known as a VOE. That's what they call your job and find out that you actually are working there. Then you also have, there's a lot of different ones. You also have, POI, which is proof of income. That's what they may ask you for, a couple other check stubs, also to make sure it matches the bank statements and things of that sort. Then sometimes they'll ask you for a LOE, that's a letter of explanation. So there's a lot of obviously little abbreviations and things of that sort. But behind the scenes, now the underwriting team, they're running your information through the FraudGuard process, and they don't just do it to see if there's bankruptcies. They also do it to see obviously if there's any wage garnishment situations that you probably didn't disclose with them, any lawsuits that may be in your name that you probably didn't disclose with them, and of course if there's a current bankruptcy, and then if you had a previous bankruptcy, when did it discharge, okay? And it kind of sucks because a lot of people, let's be honest, bankruptcies happen in the past, whatever the case may be. What I really hate to see is people that filed bankruptcy that didn't know that they could have just done things a little bit differently. I've seen people file bankruptcy just to pay $1,000 to $1,500 to keep from paying $3,000 or $4,000, thinking that bankruptcy was the route to go, and now they got to wait 2 years, before they can buy a home or rental property. So you want to try to avoid that if at all possible. But I just wanted to let you know this: these mortgage companies, they're already 10 steps ahead of you. They don't care about what's on the credit report because they're not stupid. They know for a fact that there may be some things that are on there, but you will get further into a deal, and then before you know it, you have a lot of wasted time. This is not just for bankruptcies either. This is also if you have student loans removed from your credit report as well too. Now they don't have a back-end system for that necessarily, but most of the time when you're getting a mortgage, a lot of people are going with an FHA mortgage, which is a government insured mortgage, okay? Now if you go conventional, you can avoid this particular student loan situation, but let's say if your student loans are in default and you got them removed, and of course you can't see them right off the back, so you may get the pre-approval letter, but once they do the underwriting process, that's what they call an FHA appraisal. In order for them to sign an FHA appraisal number, that's where the government is going to make sure that things are in place so they can make sure that's what the government's going to make sure that things are in place, that they don't miss anything. They're going to make sure that they're not missing, the fact that you have, your student loans are in default and things of that sort. So again, you want to try to avoid all of that stuff. This is just to set your expectations. Again, I'm not saying that you shouldn't go for a mortgage. Just don't be surprised when you get through the underwriting process and they bounce your deal back simply because something that they could not see, they can see later down the line. All right. So of course, if you like this video, like it. If you want to share it. And as always, be sure to subscribe as we have nothing but great content on the way. Thank you all so much. Have a great day.